Election season is heating up, and the tax debate is front and center for business owners. How do Donald Trump and Kamala Harris's tax plans stack up? And what could they mean for your business? We're cutting through the election noise with a clear, side-by-side breakdown of their proposals. You'll want to stick around for this. These tax changes could have a serious impact on your bottom line. Let's start with Trump's tax plan. He's looking to continue the approach from the 2017 Tax Cuts and Jobs Act. Here's how that might impact businesses. The corporate tax rate stays at 21%, down from the 35% it used to be before 2017. Trump is also proposing a new 15% tax rate specifically for middle-income families. Bonus depreciation would become permanent, allowing businesses to continue immediately deducting the full cost of certain capital expenses like machinery and equipment in the year they're purchased, rather than over time. And he plans to eliminate the estate tax. Currently, estates worth over $12.9 million are subject to this tax, so removing it would largely affect high-value estates. These specific changes would primarily impact larger corporations and high-net-worth individuals, but also offering some relief for middle-income families and businesses investing in new equipment. Now let's move on to Kamala Harris's tax plan. Her proposals focus on generating more tax revenue from large corporations and high-income earners while providing more tax relief for families. Here's what her plan could mean for businesses. Harris is proposing to raise the corporate tax rate to 28%, which would be an increase from the current 21% rate. She's also aiming to quadruple the tax on stock buybacks. The net investment income tax would expand under Harris, applying to more types of income, including active business income, meaning that some business owners could see higher taxes on their personal profits. On the positive side for businesses involved in innovation, she plans to expand the research and development tax credit to encourage more investments in new technology and ideas. For families, she's focusing on expanding credits like the child care tax credit and introducing a $25,000 first-time homebuyer credit. One important factor to keep in mind with Harris's tax plan is the current political landscape. Passing these reforms could prove difficult given the current makeup of Congress. With Republicans holding significant power in Congress, Harris may face obstacles in raising corporate taxes or expanding credits without bipartisan support. Despite their differences, Trump and Harris do have some overlap in their tax plans, especially when it comes to promoting business investment. Both plans encourage investment in businesses, but through different means. Trump favors permanent bonus depreciation, which lets businesses deduct the full cost of capital investments immediately, while Harris aims to expand R&D tax credits to promote innovation. They also both offer some tax relief for middle-income earners. Trump with an across-the-board tax cut, and Harris with targeted credits for things like child care and home buying. Now let's break down the major differences between the two plans and how they could impact your business. Trump proposes keeping the corporate tax rate at 21%, while Harris is looking to raise it to 28%. Harris wants to significantly increase taxes on stock buybacks to encourage reinvestment, while Trump leaves stock buybacks unchanged. Trump's plan includes eliminating the estate tax, which impacts high-value estates, whereas Harris does not propose any changes to the estate tax. These key differences could have a notable effect, depending on your business's structure and specific tax policies that apply to you. Which plan benefits your business more really depends on your industry and priorities. Traditional, capital-intensive businesses like manufacturing or retail may see more value in lower corporate taxes and permanent bonus depreciation. Meanwhile, industries focused on innovation, like tech or pharmaceuticals, could benefit from expanded R&D tax credits. For small businesses, Harris's family credits may provide indirect benefits to employees, while Trump's broader tax cuts for middle-income families could also boost employee take-home pay. Both plans offer distinct advantages, and their impact will vary depending on your business needs, whether that's lowering tax burdens, encouraging innovation, or supporting employee benefits. If you're unsure how these plans could affect your business, reach out to CSI for personalized advice. You can visit our website to learn more. Thanks for watching. Don't forget to subscribe for more breakdowns like this.